Good evening, ladies and gentlemen. It is with immense pleasure for giving me the opportunity to address at this virtual webinar on the file your own tax return online. I think topic is most important for these days. I am grateful to Professor Lakshmana Vatawala and CMA officers for inviting me for this valuable occasion. In accordance with the IRD's vision, my first and foremost duty as a Commissioner General is to develop the taxpayer-friendly environment in the country by enhancing the relationship between the stockholders and the facilitate taxpayers better and to make the tax administration more efficient. For that, tax system is now linked with the RAMIS system of the department. Taxpayer can comply with the tax laws in e-form, and the department has updated most of its service to connect with the taxpayer through the e-platform and facilitate so many services through the online, like tax type registration, taxpayer registration, return filing, e-payment, login appeal, etc. Ladies and gentlemen, as you all may know that e-filing of CIT is mandatory effective from the year of assessment 2021 as per the amendment brought in 2021. Accordingly, the CIT return should be submitted through e-service on or before 30th November 2021. Department is highly encouraged individual and partnership taxpayers to use the e-filing facility to submit their return. IRD had been conduct a series of seminars on how to fill the online return for corporate taxpayers, individual taxpayers, and partnership taxpayers in 3 languages. You can get these seminar videos on our YouTube channel. When you need it, please refer those videos. There are many benefits and advantages for the taxpayers as well as the IRD by submission of the return through e-service. Few such benefits are: number one, submission of the complete return without any arithmetical errors in the tax computation. Number two, ability to submit the return at any time and any place without limiting you to a place or to a time. Third one, save the time and energy of submission of the manual return. Number four, facility of completing the return offline similar to manual completion in stage as per your convenience. You can receive of the acknowledgement at the same time. I know that many tax agents are also participating in this webinar, and it is my duty to appreciate your professional works since you are playing an important role by assisting taxpayers to meet their compliance obligation. Your duty is very much important for the department as well. I am expecting the integrity of the tax practitioners and believe that you all may extend your full support by working professionally and for your client while complying with tax laws. I must thankful to CMA for organizing this webinar. And before wind up my speech, once again, I would like to extend sincere gratitude to the CMA management and Vice President Professor Lakshmana Vatawala and you all the success in your future endeavors. Thank you.
Thank you, sir. Thank you very much. So now we'll move into our keynote speech, which will be delivered by Mr. Atul Ranavira. He will deliver his speech on filing the tax return online. Before Mr. Ranavira begins his presentation, let me briefly introduce Mr. Ranavira. He is a fellow member of the Institute of Certified Management Accountants of Sri Lanka And also, he is a fellow member of Institute of Chartered Accountants of Sri Lanka. He holds an honors degree in business administration from the University of Sri Jayawardhanapura. Mr. Ranavira counts over 4 decades of experience in the accounting profession. In addition to being the managing partner of Ranavira Associates, he is a consultant to Ascent Secretarial Consultants, engaging company secretarial services. In addition to the audit practice, Mr. Ranavira has a wide experience in tax, company secretarial services, and in investment advisory and promotions. So over to you, sir.
Thank you very much. Yeah. Good evening, everybody. In order to manage the time, I will, I'll try my best to finish off within about 50 minutes. Now, I will share a document which I have prepared for this. Yeah. Yeah, today our subject is filing of online personal income tax return, individuals income tax return. Now in this, before computation and filing, first of all, we have to plan for certain tax planning. Now, therefore, I thought of starting with the introduction with income tax. Now, yeah. Now, in my presentation, this is a small content document. I have divided this into two parts. So the part one, I'll be talking about the basic tax planning. The basic tax planning I'll cover first. Then thereafter, I'll move to the online tax filing. Under the basic tax planning, first I'll spend little time to introduce the income taxes, then the imposition of income tax, then the income tax computation, then for individual, the most important part in tax planning is the tax reliefs and qualifying payments. Then sources of income, little bit I'll talk on that. Then income tax exemptions and exclusions. After that, I'll move to the online return filing. I'll keep maximum time to attend to the question and answers because we have a good panel from the IRD. Therefore, to make use of that, I will try my best to manage the maximum time for the question and answers. Yeah. First, we'll see the introduction. Now, as per the income tax law, the current Income Tax Act, Act number 24, 2017, which is effective from 1st April 2018, that is 18-19 year of assessment, it is effective. And the first amendment came to this particular act by Amendment Act number 10 of 2021. Now in a tax law, tax is a charge. As it is a charge in a tax law, most important part is the charging section. Now, likewise, in most of the other tax laws in Sri Lanka, similarly, in this tax law also, the section number 2 allocated for charging section. It says income tax shall be payable for each year of assessment. The period is each year of assessment by a person who has a taxable, who should pay. It is a person who has a taxable income. Or the second part is to cover the withholding tax part, that final withholding tax. It says, or a person who receives a final withholding payment during the year. That means a payment subject to final withholding tax. Then when we see our tax law, we have two persons, the resident persons and non-resident persons. the resident persons should pay the tax on the world income, whereas the non-resident persons should pay the tax only on the income generated in or from Sri Lanka. Right. Then this residency is explained in section 69 of the Act. I'm not going to explain that part, but basically in the case of an individual, the main measurement is the physical appearance in Sri Lanka. Basically, if an individual physically present in Sri Lanka for more than 183 days, he become a resident for Sri Lanka taxation. This residency is different from immigration and immigration law. Right? Anyway, the resident person should pay on the world income. Non-resident persons should pay only on the income arises in or from Sri Lanka. Then, to avoid double tax situations, we have already signed double tax agreements with almost 44 countries. We are having regular dealings with. Then, tax. On what we should pay tax? That is to be paid on taxable income. We should pay tax. We should calculate tax on taxable income. Then we should know what is taxable income. As per this law, the taxable income is the assessable income less qualifying payments and relief. Assessable income less qualifying payments and relief. Now then, for us to understand the taxable income, we should know what is assessable income, then what are the qualifying payments, what are the reliefs. This is very much important in tax planning. Now we'll try to understand those things briefly. Assessable income. When you see this law, the section 4 says the assessable income is equivalent to the income from employment, income from business, income from investment and other sources. There are 4 sources: employment, business, income, investment and other sources. Then with relate to the now next thing is that mean now a total of these 4 types of assessable called as assessable income, total assessable income. Now from this total assessable income, we have to deduct the qualifying payments and the reliefs to arrive at the taxable income. Now these qualifying payments and reliefs are given in under the section 50A, 52 in the 5th schedule to the Act. The 5th schedule to the Act. Now we will cover these qualifying payments and reliefs separately. Yeah. Before that, now we'll see how to calculate the tax. The calculation formula. Formula is taxable income. Once we arrive at the taxable income, we have to apply the applicable rate or rates into the taxable income and calculate the gross tax amount. Once we calculate the gross tax amount, from the gross tax amount, we have to deduct various tax credits. There are 2 types of tax credits: local tax credits and the overseas tax credit. Both, if it is applicable, we can deduct. Then the income tax is equivalent to the taxable income into the rates minus the taxes, the credits what we have already paid, plus final withholding payment into the rates. That is any payment which is subjected to final withholding tax. There we are getting only the net amount, but the tax amount is directly remitted by the agent, the payee, to the Inland Revenue Department. That tax portion also they have added to this definition. Right. Now, for easy understanding, I have prepared a summarized format of this computation, what we discussed. Now, as I mentioned, we should calculate the employment income separately, business income separately, investment income separately. If there are any other income separately. Then we have to take the adjusted profits for taxation on these different types of incomes. Then the total amount is the assessable income. Now, as I mentioned, from this assessable income, when we arrive, we should allow the various other deductions also. Then we can deduct those things before arriving the final assessable income. We can deduct the exempt income. If there are any exempt income, there are certain exempt income under the employment, certain under business, certain under investment. There may be certain things under other income. Right? Then, if there are any final any income where the final withholding tax is already paid, then we have to deduct those things also. Then there are certain specific exclusions in the law. If there are any specific exclusions, we can deduct those things also. Then there are certain specially allowable amounts. Law says these amounts to be allowed. Then we have to deduct those. Then allowable losses. Now, in the case of especially the business and investment, especially, there are losses what we can carry forward and claim on a subsequent date, subject to certain limitations. Then if there are allowable losses, we should deduct those things also. Then in addition to deduction of these things, there are certain disallowable amounts also. If there are any disallowable expenses and all, we have to add back those things. Once we do these things, we are getting the assessable income from employment, assessable income from business, assessable income from investment, and assessable income from others. Then we total up all these assessable income and arrive the total assessable income. We arrive the total assessable income. Then once we arrive the total assessable income, as I mentioned, to arrive the taxable income from the assessable income, we have to deduct the qualifying payments and the reliefs. If you take the qualifying payments, there are 6 types of qualifying payments. We'll just run through these things, but a detailed note I have given. I don't think we have time to discuss all those things. Donations to any person, by any person to approved charities. Then donations by any person to government or government institutions. Then any sum remitted to consolidated fund or president fund by the corporation, that is applicable only for corporations. Then the next is contribution to establish Samurdhi family shop by any resident individual. Resident individuals spend money to establish the shop for a Samurdhi family. That is also qualifying payment. Then with related to the film, also there are some film production and upgradation, cinema hall upgradation, equipment upgradation and all. There's a qualifying payment to any person. Then financial institutions, acquisition or merger costs also could be allowed as a qualifying payment. But in the case of individuals, out of these things, the first one, donation to the charity, approved charities, donation to the government, then helping to Samurdhi family for a shop and film production, those options are available. Then we'll see the reliefs. Now, under the reliefs, there's a personal allowance for every individual. There's a personal allowance of 3 million rupees a year. That particular person can deduct that. This personal allowance is allowable, is available for all residents as well as even non-resident but citizens. Even non-residents but citizens, it is allowable. Then there's a 25% repair allowance for individuals on rent income. That rent income is an investment income. On this particular investment income, there's a 25% repair allowance only for individual. These the reliefs are available only for individual. Then on certain expenses, there's 1.2 million expense. Now we'll see those things later. Then on solar panel cost, if you fix solar panels on your roof and supply the electricity to the national grid, on this capital expenditure, you are allowed to claim 600,000 rupees per annum. Though it says solar panel, it covers there's a small drafting error in the law. It says solar panels, but it should cover the solar system, the cost of solar system. Now, once we deduct these things, we are getting the taxable income. Once we get the taxable income, it's a matter of applying tax rate or rates on the taxable income and arrive the gross tax amount. In the case of individual, there are 6%, 12%, 18% tax rates. On capital gain 10%, and certain liquor, tobacco, and certain things, there's 40% higher tax rate. Whatever the applicable tax rates, we have to apply on the relevant income and arrive the total tax. Once we arrive the total tax, as I mentioned, we can deduct the local tax credit as well as foreign tax credit as applicable. Then we are getting the ultimate answer, that is the balance tax payable or overpaid, right? Then with relate to qualifying payment, even we don't have time, I'll just run through the reliefs part, because this is a very easy tax planning by an individual. It is a very easy tax planning. Now, anyway, the personal allowance number 1, personal allowance of 3 million is automatically available for any resident individual and any citizens of Sri Lanka, individuals. Then the second thing, as I mentioned, 25% repair allowance on individuals. Then third category, this expenditure. There's expenditure relief of 1.2 million. There are 5 types of expenditure. If you will spend money during that particular tax year of assessment, you can total up all those costs, and out of this total cost incurred up to 1.2 million is allowable. Suppose your actual total cost is 1 million, you can claim only 1 million. Suppose your actual cost is 1.5 million, you can claim only you can claim up to 1.2 million. What other is expenditure? Health expenditure, including medical insurance. Educational expenses of that taxpayer as well as the children. But it has to be locally education. Then the third one, interest on housing loans. Then next, contribution to local pension scheme. Local pension scheme. Next, expenditure on purchase of CSE listed shares and securities and treasury bills and treasury bonds. Now, suppose you have not planned taxes, and on 30th March, we'll say you realize that I have not planned any taxes. Then on even on 31st, you can incur some expenses on these items, any one or any several of these things, and enjoy the tax benefit. As an example, on 31st, you can buy certain shares. Then you are eligible to claim up to the actual cost, subject to 1.2 million maximum. Then next item, solar panel. So if you fix solar panels on your roof, the solar system cost, you can deduct, the capital cost you can deduct up to 600,000 rupees per year of assessment until you utilize the entire cost. Then qualifying payments, I'm not going to read all these things. In the qualifying payments, as I mentioned, the individuals can enjoy only these 2 types of charities, and film production and the helping to Samurdhi lady to set up a shop. Those things they can claim. There are 2 items which are not eligible for individuals. Then sources of income, as I mentioned, there are 4 sources of income: employment, business, investment, and other sources. Now I'm not going to explain all these things. Then how to calculate this income? How to calculate basis of calculation? This basis of calculation, as we know, there are 2 bases: cash basis and accrual basis. On these things, in the case of employment income, it has to be cash basis. In the case of business income, it has to be accrual basis. In the case of investment income, on individuals, it has to be cash basis. On other persons, that is entities, on a proper basis. They have not given this basis. That means they can apply either accrual basis or cash basis, which is more applicable to them. Then other income also says for individual as well as other persons, proper basis. Right. Then I mentioned if there are any exemptions or exclusions, we can deduct those things also. There are certain exemptions given in the tax law. On employment income also there are few exemptions, like capital sum paid to a person as a compensation or gratuity in relation to a person, gratuity. Then personal injuries and death of a person, that is there. Then certain pensions of government pension is exempted. Then certain retirement payments are exemption, including pension funds, receiving some money from pension fund and approved and ETF. Then if you receive money from a provident fund, that is also exempted. That is regulated provident funds. That is also exempted. Then certain diplomatic privileges are also exempted for those people. Then benefit receiving by a government employee from disposing of or by getting a road vehicle permit. Now there's a value on road vehicle permit. That value, you are getting that value as a result of an employment. Then it should be taxed. But under this law, it is specifically exempted. Then for easy understanding and to manage the time, I have prepared another small summary, a table type of a thing for exemptions on business income. Because after this session, we'll be sharing this document with all participants and applicants. Then you all can read this in detail. Right? I have prepared a small summary. I'm not going to read this summary because we have to manage time. Right. Then there are certain exemptions on business income. Likewise, there are certain exemptions on investment income. Exemptions as well as exclusions on investment income. When we talk about the investment income, there are two types. One is capital gain, the other one is normal periodical income. When we take the capital gain, on capital gain, there are certain exemptions as well as exclusions. Now, if you dispose your residence where you lived at least 2 years during the most recent past 3 years, then you need not to pay tax on that capital gain. Then small disposals per transaction up to 50,000 rupees or accumulated transaction like that up to 600,000 rupees, no capital gain tax. Then in the next is in the share market dealings. When you earn profit on share market dealing, that is that disposal gain is not taxable. It is a capital gain but not taxable. Then there are certain excluded items also, like transferring of assets to a spouse or ex-spouse, transshipment by way of a debt, then transfer to an associate of an entity, then transfer to a charitable institution, gifting, then transfer of assets of a business to an associate. Those things are excluded, not exempted, excluded. Then I have prepared, other than those things, I have prepared a small summary for easy understanding on non-capital gain transaction benefits. Non-capital gain transaction benefits, the exemptions. I'm not going to read this. It is well explained in this note. Then saying that, I would like to move to manage the time. I would like to move to the tax planning part. Now, we know that the total 4 sources of income, the total is the assessable income. From the assessable income, once we deduct the qualifying payment and reliefs, we are getting the taxable income. On taxable income, we are applying the tax rates. Now we'll see when we are filing the tax return and when we are making the payments, what are the important things. I have summarized those important highlights. We'll first go through these highlights. What a year of assessment, as we mentioned, the year of assessment start from 1st of April and ending by 31st March of the subsequent year. Then who should file an income tax return? As I mentioned, every person chargeable with income tax under section 126, every person chargeable with income tax should pay income tax and file the income tax return. Then what is the minimum income tax of an individual, income of an individual to be liable to income tax? That depends, because from the gross assessable income, we are eligible to deduct the qualifying payments and relief. Therefore, after deducting these things, if our balance amount, if there's a balance amount that is a taxable income, then we have to pay tax. Then definitely any person whose assessable, whose income is less than the 3 million a year, no income tax, because the personal allowance relief is there. And you can deduct the other reliefs also. Then what are the reliefs available? Now we have already discussed the relief available. Then qualifying payments available, we have already discussed. Then when to pay income tax? When we have to pay income tax? It is to be paid in 2 methods. One is withholding tax. The other one is self-assessment payment. In the case of self-assessment payment, we have to make the payment in 4 quarterly installments. It is within 1.5 months from the end of each quarter. Then, if there are any final taxes, those final taxes to be paid by 30th September of the immediate subsequent year of assessment. How to pay tax? As I mentioned, withholding tax or self-assessment basis. Then what withholding tax is on remuneration. On remuneration, what are the withholding tax? As all of us know, earlier we had a thing called pay as you earn tax, a withholding tax on remuneration called pay as you earn tax. Now, the government abolished this payee tax, most of the withholding taxes effective from 1st of January 2020. And they reintroduced a tax similar to withholding, similar to payee tax called advanced personal income tax with effect from 1st April 2020. After 3 months gap, they introduced advanced personal income tax. Now, this the difference between these two, the advanced personal income tax is not mandatory for resident people. It is mandatory only for non-resident persons. Not mandatory for resident individual, mandatory for non-resident individual. Earlier, the payee tax was mandatory for any individual. Then, is APIT mandatory? As I mentioned, that is the answer. Then what are the other withholding taxes applicable to any person? There are certain other withholding taxes to any person, that is individual as well as entities. The 14% withholding tax on lottery, reward, betting, gambling. On those income, there's a 14% withholding tax. Then on gems sold by a person in gem and jewelry authority auction, there's a withholding tax of 2.5%. That is both these are final withholding tax. No more tax on that for any person. Then what are the other withholding taxes applicable only to non-resident person? Only to non-resident person. There are 2 types. I have included only one here. One is services fee. There's 2% withholding tax on services fee, land, sea, air transport, and telecommunication. Then in addition to this, On bank rupee deposits, there's another withholding tax which is continuing for them. Can a withholding tax non-liable person pay withholding tax? Now we'll say that this particular person is not liable for withholding tax, but he wishes to pay withholding tax. Yes, for that they have introduced a withholding tax called advance income tax. If you wish to, you can advise the payer to deduct that withholding tax. That is the recipient's option. What tax returns to be filed? Now, what are the tax returns? There are two types of returns. Estimated tax return by 15th of August of that year of assessment. Then the final withholding, final income tax return by 30th November of the immediate year of assessment. Then we'll move to see how to file a tax return. Either you can file on manually, but this manual filing is open only for individuals now. Then the online option is mandatory for entities, but even individuals can file online. It is very easy. Then what are the initial requirements to process an online filing? First, you have to obtain a TIN number. Then you have to obtain a PIN number. I'm covering here only the individuals. In the case of individuals, you have to obtain a TIN number, then you have to obtain a PIN number, personal identification number. Then only you can do log into the online system and make the tax payments and file in the tax returns online. Then what are the requirements to obtain an individual's TIN? Now this obtaining of TIN, you yourself can apply for this, or you can advise your tax consultants to do that. But whoever who applies it should submit basically these documents. Application for taxpayer registration. The application number is TPR 002. Then application for the tax type registration, TPR 005. You can get downloaded all these things from the IRD website. Then you have to submit a salary slip, then NIC copy, then documents to prove the residential address, like some bill or something like that. Normally within a day, if you'll apply within a day, you'll be able to obtain the TIN number, right? That is manually if you will submit. Then if you will submit online, the online system is also developed there. Therefore, you can apply online. You need not to go to the department. Then what we have to do is to log into the IRD website, click access to e-services. Then once you log into the IRD website, you have to select the language. Then thereafter you have to click e-services. Then under e-services, access to e-servicing. Thereafter you have to click PIN request. There's a page PIN request. Once you request go into that page, then you have to file those related documents, right? Then click the taxpayer registration link, fill the application. There's an application. You have to fill that application online and upload scanned copies of those documents, the above mentioned documents. You have to scan those things and upload it. Generally, within about 5 working days, 5 days, you are getting the TIN registration. Through email, you are getting the TIN registration. Then how to get a PIN registration? Personal income tax, personal identification number. That is also you can obtain online after obtaining the TIN. Then you can log into the department website and click access to e-services, select the language, then access to e-services, then click PIN request. Then there's an application. You have to log in, you have to fill that application form and submit that application Then you are getting an acknowledgement. You are getting an acknowledgement. Once you get in the acknowledgement, you have to get downloaded the acknowledgement and email it to IRD, this email address. Then you have to email it to the email address given here with a copy of the NIC. With a copy of the NIC. Once you submit this, generally in practice, within about 5 days, you will be receiving a PIN email. In certain cases, within about 1 or 2 days, you are getting, but average, you keep at least 5 days for that. Then you are getting an email. Once you get this email, thereafter, you will be getting the password, right? You will be getting the password. You have through email. Then you have to change the password. Log into that and change the password. This is not much cumbersome. You can do this on your own if you are having computer literacy. You can do this. Right. Then, even after receiving the next question, what I have put, even after receiving the hard copy of the tax return. Now, in certain cases, as I mentioned, for individuals, this e-filing is optional. Now, as a result, all individuals are now getting manual tax return, hard copies. Now, once you receive the hard copy, are you to fill that hard copy and hand over, or can you log into the system and file the online return? Yes. You can log into the system by applying the previous 2 cases, the steps. Then after that, you can submit your, once you get the password, you can log into your file and fill and file the online return. Now, this is a small summary. Now, I would like to share certain screenshots what I have taken from the department website. These are certain screenshots what I have extracted from the department website. Now, online return filing. Online return filing, as I mentioned, you have selected the online return filing. Once you select the online return filing, this yellow colored cage, access to e-service. Then you have to click access to e-service. Then in these cages, there are shaded cages, there are certain things. One is TIN, obtaining a TIN, taxpayer registration. Then PIN request. Then next, authorization of staff tax agent. This third cage is mainly applicable for entities, not for individuals. Even individual, now entity, they should take separate password for other people, authorized agents who are logging. But even individuals can appoint an authorized representative to deal with the department on behalf of that particular individual. If it is the situation, through this, you can get that facility as well. Right. Then verify authenticity of certificate. Those cages are there. Then, now in this case, proceed to login. Now next cage is proceed to login. Now you have to go into that and select, as I mentioned, you have to select the taxpayer type, whether you are an individual, corporate or partnership, or tax agent. That means agent is applicable for withholding taxes. You are deducting withholding tax on behalf of somebody else. Withholding tax, type of withholding tax may be APIT or AIT or whatever it is. Now, PIT or whatever it is. Advanced income tax or other normal withholding taxes like on gem and jewelry authority auction sales and all, normal withholding tax. All these are withholding taxes. Therefore, if you are deducting withholding taxes on behalf of somebody else, if you are the person who is making the payment, you have to click this last cage, tax agent. Right. Now, in our case, as we are trying to learn on individual taxpayers, what we have to do in this cage, we have to tick the individual taxpayer. Then proceed to log in. Then once you proceed, you are getting a tax return. Now, these are the tax returns. Now, there's a main return. You are getting the main return. Individual income tax return comprised with following schedules. Then first one is the main tax return. Then schedule 1, employment income. Schedule 2, business income. Schedule 3, investment income. Schedule 4, other income. Then qualifying payments and expenditure relief. Then final withholding tax payments. Then withholding tax amount. Then tax calculation. Then next schedule, tax credits. Schedule number 10, losses. Schedule number next, you have to attach the statement of assets and liabilities, statement of assets and liabilities, then the declaration part, then the confirmation part. These 14 items are there in this, plus the main tax return. Now, first you should fill the main tax return. What you should do is to log into this each and every schedule, and if that particular schedule is applicable to you, you have to fill that schedule. As an example, if you are an employee, if you are having any remuneration income, employment income, you have to log into schedule number 1 and fill the required information in that. Once you fill those things and process that, automatically that employment income goes to the main tax return under employment category. Then likewise, if you are having any business income, you should fill the schedule 2. If you are having any investment income, you should fill schedule 3. Likewise, whatever the schedules applicable to you, you have to select these schedules and fill those things. Once you fill all these things, automatically the main return get filled. Right. Now, procedure of procedure of e-filing the income tax. Right. First, log into the individual taxpayer's profile in Remis through the PIN. Now, without a PIN, you can't log in. You have to enter the PIN and log into that. Then select IIT from the individual's income tax, IIT from the return or schedule management file, and require to tick the respective year of assessment to continue when click the proceed. Then now there you have to select the year of assessment. This is I'm explaining how to do this, right? You log into the system, then select IIT, then tick that, then you have to fill the year of assessment, then proceed. The main return page is linking. Then the main return page is linking. Then we can access to each schedule by clicking the schedule link. Now for each schedule, there's a schedule link in that. You can click into that. Only thing for you to try this, you should have the PIN number. If you are having a PIN number, you should log into the system and try these things. But at last, you can keep it as a draft. No need of finishing that. Right. As a trial, you can do this. You can try it and cancel it. Right. Then we can access to the schedule by clicking the schedule links. Once you click the schedule link, you can access that schedule. Or clicking the next button in the bottom of the main tax. Then Schedule 1, I'm not going to explain everything, but in the Schedule 1, it includes two tables. In Schedule 1, there are two tables to enter the details of current employment income and the terminal benefits. For the current employment income, there's a separate page, and for the terminal benefits, there's a separate page. You have to fill these things. Then fill in the cages below the table, including the relevant details. Require clicking add button. There's add button. You have to click that add button. Then only you can move to the next one. Then same procedure is applied for the table of terminal benefits. Even for the terminal benefits page also, you have to do the same thing if there are terminal benefits. Then employment income. Exempt amount. There's a place where you can record the exempt employment income. As I mentioned, as I have listed earlier, there are some exempt employment income. If you are having any exempt employment income, you have to fill that page. Even in that, now it says in this blue color dot, detail of employment income. Under that type of income, you have to give these details. Then once you enter these things, automatically it gives the total. Right? This is this is a screenshot of that. Now I'll move to schedule number 2. Schedule number 2, you log into the schedule, you click the schedule number 2 and enter the details. Now, detail of business income composed with 3 tables for business income. There are 3 tables in this of sole proprietorships, partnerships, and trusts respectively. You have to select the correct one or correct item, cages, and fill those things. Now, then, after filling these things, enter the activity code, nature of the business. You have to enter the activity code. Activity code, you can get it from the department website. Right? Then, nature of the business. You have to enter the nature of the business. Then, gain and profits, the fields, and click add. After filling these things, you have to click add button. Please note, this is my explanation. Please note that the activity codes are available in the IRD website, as I mentioned. Useful information, that is under the useful information. If you go to the useful information of the IRD and economic activity codes is there, then you can select those activity codes. Then part 2 of this, exempt income. In that, you have to fill this page, part 2, exempt income, and then we can move to schedule number 3. Schedule number 3 is for investment income. It is for investment income. For investment income, there are 3 tables in that. Table A, Table B, Table C. Table A represents the investment income of an individual, like rent, interest, commissions, etc., dividend and all. Then the table 2, there's a separate table for investment income from partnerships. You are an individual, you are getting investment income from a partnership where you are a partner. Then you have to fill this table B. Then table C, investment income from a trust. If you are a beneficiary of a trust, you are getting various benefits. Then you have to fill this table C. Right. Then part 2 of that, relief for investment income. Under the investment income, the second part is relief. There are certain reliefs. If there are any reliefs, you have to fill these things like rent income relief and various other reliefs. You have to fill those things. Then include the exempt investment income amount in page 317. There's a page 317 in this lot. Exempt amount, you have to fill that page. Then you can move forward to the next one, schedule 4. Schedule 4 is for other income. I'll move to Schedule 5. It is for qualifying payments and expenditure relief. Qualifying payments and expenditure reliefs. Now we'll see. Qualifying payments. Under this stage, there are two parts. Part A, qualifying payments. Part B, qualifying payments under the Part A, qualifying payments under this Inland Revenue Act. Part B, qualifying payments brought forward from the previous Inland Revenue Act. Right. Then enter the brought forward qualifying payments into this cage. There's a separate box. In that, those applicable places. At the beginning, it is not easy for you to fill this. You have to try this. Try 2-3 times, then definitely you can learn yourself. If you are having a computer literacy, definitely you can learn this. Then these cages, applicable cages, you have to fill and move forward. Then part C of that investment relief, the expenditure relief. In that, as I mentioned, all 5 types of expenditure reliefs are given in this: health, education, housing, pension, and share market. Right? Shares and investments in shares and treasury bills and all. Then in that, you can claim only up to, suppose your amount is greater than 1.2 million, the total, you will be getting only 1.2 million. Maximum 1.2 million, subject to the actual payment. Then Schedule 6, that is final withholding payments. There are 2 parts. Part A, withholding tax deducted by withholding agents. Part B, withholding taxes which fail to deduct. Some agents, they fail to deduct that. Now, even in that case, the agent as well as the principal, both are, the taxpayer, both are liable to pay tax. Therefore, you have to fill that also. Then Schedule 7, withholding tax, includes 2 tables. In that, there are 2 tables, withholding tax. Withholding tax, or AIT, is also withholding tax, deducted by withholding agent. Then table B, withholding tax which failed to be deducted. There's a separate table for that. We can fill those tables. Then I'll move to Schedule 8. Schedule 8, tax calculation. Now, once you enter all those things, automatically it goes to the main schedule and gives you the taxable income. Once you get the taxable income, you have to go into the Schedule 8. You get this figure in Schedule 8. Then you can calculate the tax calculation. Now, this schedule is for calculating of income tax. According to that, then it should enter the relevant taxable amount in the relevant cages. We have to enter the relevant amounts in relevant cages, because now certain income are taxing at higher rates, certain income are taxing at different rates. Therefore, you have to enter into applicable cages. Then in this part A, taxable income for the year of assessment. For the year of assessment. Part B, tax on terminal benefits. Then part C, tax on gain on real. Tax on tax on why? Yeah, tax on realization of investment assets. Then part D, tax on gain of realization of investment assets from a partnership. If you are getting that from a partnership, there's a separate case. Then next one, part E, tax on products, the tobacco, liquor at 40%. Then tax on balance taxable income on progressive rate, liquor, tobacco, and other things. Then part E, tax on final withholding payments, connecting from Schedule 6, or it is connecting from Schedule 6. Now, these parts you have to fill in this table. Once you fill these applicable things, you are getting these figures into this. Then automatically you are getting the tax amount. Now you can see in terminal benefits, it says under special rate 0%, then the answer 803 kg 803, the answer will be 0. Then the 83B3, the answer at 6%. Then next cage answer at 12%. Different rates are given. Likewise, terminal benefits also 6%, 12%, 18%. Non-terminal terminal benefits under normal rates 6%, 12%, and 18% are there. Then likewise, you are getting these tax amounts, right? Capital gain 10%, and these higher rates like betting and gaming, then manufacture and sale, or import and sale of liquor and tobacco 40%. Then the individual's normal tax rate 6%, 12%, 18%, all these things are there in this table. Once you fill all these things, you are getting the answer for this box 811. 811. That is the total income tax amount, total tax on final withholding payment. That is the final withholding payment. 810, you get the normal income tax amount. Right. Then schedule number 9. Schedule number 9. Tax credits. As I mentioned, local tax credit and overseas tax credit. Includes the tax credit, foreign tax credit, as well as local tax credits, APIT, AIT, ESC, partnership tax, and various things. Now you have to fill these tax credits in this table. Right? Now, actually, what we are trying to do is we are trying to learn swimming without water. Therefore, I request everybody to do a trial in your computers, log into the department computer system and try it. It is not much difficult. Then I have mentioned need to enter the amounts in the relevant cages as specified in the return. Right? ESC, subject to those upper claiming number of years, that year plus another 2 years, subject to that number of years only you can claim. If there are any excess, expired ESC, you can't claim, the time period expired. Then schedule 9A is for ESC. In this cage, this schedule, you have to fill the ESC amounts, right? Then next, partner share of partner to partnership tax. There's a separate cage for that. Then schedule 9C, the self-assessment payment. Those two are given here. Schedule 9B, partner share of partnership tax. Then 9C, installment payment, that is the self-assessment payments. Now you have to fill these things. Then schedule 10. 10 represent the losses. You have to fill that schedule 10. Then once you fill that, it automatically set off again the to arrive the taxable income. Then the statement of assets and liabilities. You have to file the statement of assets and liabilities. There's a statement, you have to fill that. Right? As at 31st, now if it is 2021 year of assessment, as at 31st March 2021, you have to do that. Then you have to fill the liabilities and all. Then after filling all these things, you have to give a declaration. There are two types of declaration. One is part A of the declaration that is applicable only if there's any other person who is filling your tax return for a fee. That may be approved accountant or anybody else helping you for a fee. Then part A to be filled by that particular person. Then part 2 is by the taxpayer. Part 2 is by the taxpayer. Now these details, you can leisurely read it and see what are the details available in this, because we are sharing this document. Now this part A, with this recent amendment, they have mentioned in the amendment section 126 subsection 5, they have mentioned that the approved accountant or whoever the person who is filling somebody else's return for a fee should give a separate return, separate report. Now I have drafted the report and given in this red color. This is a report which I have drafted, a proposed report. They are that particular person, the approved accountant or whoever it is, that particular person should commit only the things what he is doing, because the taxpayer is the one who is paying to that particular approved accountant or whoever the representative. Then the representative is agreed to give certain services to the taxpayer. The services what he is giving, he has to highlight here. Now, therefore, as per to match the law, what I have written here, as per the agreed upon assignment, that is the assignment with the taxpayer. With the taxpayer, if it is given by myself, I have assisted in preparing the tax return of Mr. Pereira for the year of assessment, we'll say 2021, by relying on the information and documents provided by the taxpayer. Normally, in tax assignments, we are not verifying the documents. We rely the information given by the taxpayer. Then that fact you have to mention here. By relying the information and documents provided by the taxpayer, and state that we have not verified the accuracy or completeness of such documents and information. Because without verifying, we can't take the responsibility. Therefore, we have to mention that fact. This is sufficient for the approved accountant certification. This is a draft, my draft as well. Then confirmation. After doing all these things, there's a confirmation page. You have to fill this confirmation. Then if you feel that you need to amend something, you can go back by clicking the amend button. You can go back and amend those things. Then at the end, you have to click the submit button. Once you submit it, automatically it is getting finalized. Then after pressing the submit button, after getting a printout, then if the computation is accurately done, we can submit it by using the submit button. After getting a printout, before submitting, please get a printout or at least a PDF copy saved in another place. That is very much important, because after submitting, you can't get the whole return from that. Therefore, before submitting, please get it saved as a PDF copy or get a printout of that. Better to save it as a PDF copy separately. Do not submit without taking a print or saving in a PDF. Right. Then upon submitting, we received an acknowledgement. Advising to take a printout of the same, that acknowledgement. Take a printout of the acknowledgement. Then we can take the printout of the acknowledgement, or we can save that acknowledgement as a PDF copy. Then I think that's all. I have taken almost 1 hour. Even I wanted to manage with 50 minutes, but couldn't. Now that's all what I have to mention. Now we will, I will wind up my delivery part. Then we'll move to the panel discussion, because we have 3 eminent tax officers, senior officers from the IRD to help us, as well as 1 practitioner, as well as 1 representative from the mercantile, the commercial sector. Thank you.
Thank you very much, Mr. Atula. Thank you very much for your detailed explanation of how to file the income tax return online. So now may I invite Mr. Gajendra, CMA Council member and the Chairman of Taxation Committee, to commence the panel discussion. He will be joined by, I think Mr. Ranavira will also be there in the panel, but he will be joined by 2 other representatives from the Department of Inland Revenue, because I can't see the 3rd person, Mr. Hiran Meneripitia. He'll be joined by Mr. Sujeeva Henadira, Commissioner, and also by Mr. Nandana Kumara. He is a Senior Deputy Commissioner. Apart from those 2 representatives from the Department of Inland Revenue, we also have the pleasure of having with us today Ms. Deshapriya Saranayaka, partner at UWP Pereira & Company, Chartered Accountants, and Mr. Amila Sugathapala, Treasurer, National Chamber of Industries and CEO of Cal Exports Lanka Private Limited. So over to you, Mr. Gajendra. You can start the panel discussion now.
Thank you, Mr. Ruchira. Thank you, Mr. Atula, for your wonderful presentation. Now, we have got almost 45 questions and we have a limited time, so we will manage. I will see how we can manage the same. So I will start with Mr. Amila to take up any points or any issues faced by your chamber or industry people. Thank you.
Thank you, Gaje. Good evening, everybody. First of all, on behalf of the Ceylon National Chamber of Industries, I thank CMA for organizing this timely webinar on topic file your own tax return online. Yes, Gaje, most of the things which I wanted to highlight are already mentioned during this discussion, but I will just quickly go through what I have to say. Mr. Anavira did a very comprehensive analysis on this the topic, but as you can see, when you're filing the return, it's not that easy. It is a bit complicated. You need a lot of you may need a lot of support. Again, if you look at this IRD website, they have a lot of information on filing online returns, and you know it shows that it's more user friendly, or it looks like it's more cost effective process. Again, this website includes a whole heap of other services available online, starting from registration to requesting for refunds, etc. Commissioner General Mr. Bandara also mentioned these advantages on available is online tax return. In a point form, I want to mention a couple of things. Now, say we are going through a pandemic situation. So in the new normal, e-services from IRD would be very much beneficial for its customers. Even Professor Vatawala mentioned that during his initial remarks. Then filing online returns will help data entry errors, may experience lower administration costs. There are no limitations in terms of timing and place of filing returns. All these things were mentioned. Then maybe a secured payment methods can be applied, and the taxpayer will have a peace of mind for that, for getting an official statement that the taxpayer is compliant with the requirement. But at the same time, I would like to draw your attention for some other areas. Maybe you can take it up during the panel discussion. Maybe we saw that it's certain supporting documents that we have to submit, and the complexity of the information required, how you are going to manage that. Then the availability of technology among all the taxpayers, and the exposure for the technology, as well as their knowledge level on those lines. Then effectiveness of IRD support system also will be a key to the success of this initiative. I'm talking about mainly knowledgeable staff, adequate staff, and support on other resources. Those are the remarks which I would like to bring in, Kajay. If you have any particular questions, I may answer at a later stage.
Thank you, Amila, for your valuable contribution. Now I quickly move to the fellow panelist, and he's representing the practitioners sector, especially the SMPs. So Deshapriya, can I have your comments, please?
Yes, good evening, Jajay. Thank you for the opportunity. So at the outset itself, let me thank CMA Sri Lanka for this wonderful initiative. And as a practitioner, when I look at the current situation, Gajay, it is noteworthy that, of course, there are two aspects to the issue. The issue of issues or concerns faced by the taxpayers and concerns of practitioners. The first and the biggest issue is created by the current pandemic, as we all know, which has resulted in most of the individual taxpayers not receiving their tax return forms as of now. So, this has resulted in, taxpayers having concerns over whether the filing of income is on or before 30th. They are not geared to do this as of now. So, but I understand there is no, there's no extension for filing the returns of 2021 up to now. So, but however, the fact remains that most of these individuals have not received their return forms as yet. On the other hand, it has been made mandatory for the corporate income tax payers. They should file their income tax return online, which is the way forward. So, and hence they will not receive any corporate tax return this year. But for the individuals, they have the option of filing the income tax return manually or online for the year of assessment 2021. So because of that, I think it is very advisable, and I think department also encourages the taxpayers, and we as practitioners should also encourage the taxpayers to file their returns online. But however, from taxpayers' parts, as a practitioner, I find there are concerns, lack of awareness on to information technology. So as Mr. Ranavir explained, most of the people, they don't want to get into the system and check whether this is easy or not sometimes. And also lack of knowledge on obtaining this SSID and PIN numbers. Without that, you can't start the process even. So, and basic requirements, like sometimes for these individuals, there's issues of finding a scanner or generating an email address. These kind of issues are also there. So, so on a practitioner's point of view, once you fill so those issues are there. So, but on practitioner's point of view also, there are issues, sometimes, once you return, once you fill your taxpayer's return, and, once you take this PDF format, sometimes it can be a little complicated. The document that you save, version becomes complicated and complex to understand. But amidst all this, I think taxpayers and the practitioners and all these people are trying to make sure that we meet this deadline as of 30th November 2021. But what I have to reiterate is that since e-filing is new, and specifically to individuals, this is a new thing. So I felt that since an eminent panel from Department of Inland Revenue is also here, it would be appropriate that the Department of Inland Revenue can give a chance to individual taxpayers to correct or amend their return after submissions for, for 1 or 2 years. That can be a win-win situation. That's my personal idea. If that can be facilitated, at least for 1 or 2 years going forward, that will be a great initiative and it will be a win-win situation for both the parties. So anyway, I believe that we all have to get used to the system, and we have to respect it. And this is the way forward. And basically, that's my idea, Gajay. And thank you very much for the opportunity.
Thank you, Deshapriya. Now, before moving to the questions, I would like to hear from the Inland Revenue officials, namely Mr. Sujiva, Mr. Hiran, and Mr. Nandana, about the issues faced already, the experience you have overcome, maybe based on the last year returns or already the questions. What are the issues faced by the taxpayers and the practitioners from your experience? Thank you.
Good evening, Mr. Gajendra. Yeah, first of all, I must thanks for CMA and Professor Vatola to inviting us to this webinar on that for giving our contribution to the taxpayers. And Mr. Ranavir has done very well the presentation for that relating to the individual income tax. So then we can add some points on that presentation, and if any question on that taxpayers, we can give a solution on that here. Here myself and Mr. Hiran Meneribiti and Mr. Nandana Kumar are also joining for this panel. Actually, one point I want to highlight that Mr. Anahira explained that when taxpayer log into the e-service, there are three points that taxpayer has to select first, if he is a corporate taxpayer or individual taxpayer or tax agent. Yeah, I want to highlight that tax agent point. The tax agent means that tax practitioners can register from the Inland Revenue Department as a tax agent, and he can get the login password for all his on behalf of his client. It is very benefit and very good opportunity to tax agents. Then they can log into the system on behalf of their clients, and the tax agent can file the returns via e-services on all of their taxpayers. And Mr. Gajendra, you asked from what are the problems we faced that during the last period when e-filing. That I noticed that one participant asked during the peak period there may be some slowness in the system, but this time actually we got some solution on that. Yes, we faced some slowness problem that last taxable period, but this time we have increased the bandwidth also, that we have doubled the bandwidth for login for taxpayers, because especially the CIT taxpayers, the CIT is mandatory for e-filing, so that we have to take care of that matter this time. And I want to highlight that you know that Inland Revenue Section 126 of Inland Revenue Act define what is the tax return. Yeah, what is the tax return? According to the definition, Commissioner General has published the tax return form for corporate income tax, individual income tax, and partnership income tax, all IT tax returns. And Section 132 explain what is the self-assessment return. What is the self-assessment? So then all taxpayers should file the self-assessed return according to their based on their income. So that tax return, if I take individual tax return, there is three individual tax return is included three parts. One is tax return form and schedules and other documents. According to the law, the sections explain, the self-assessed return is included only the return and the schedule. Then taxpayers should file for their self-assessment return and the schedules, and definitely they have to file the other documents also. For example, if he has a business income, he has to file audited accounts set like that. But if you file SA return, self-assessed return via e-services, we are going to issue the acknowledgement based on that self-assessment, and that is the date, the self-assessed date on the for that taxpayer who filed the tax return. Based on that self-assessed return, we count it is affected to the time bar date from the self-assessed date. So that my advice is, our request is, if you file the tax return early, you will get the benefit for that time bar date. Time bar date will be coming early. You know that there's a 30 months time bar date from the filing date. So that if we have any here, then we can answer any question on that taxpayer registration, how to get the e-filing registration, how to obtain the SSID or PIN numbers, and how to fill up the IIT return, like that. Then we will answer on that question. Mr. Gajendra, you have a question on that matters here. Thank you.
Thank you. So now I will move to the question and answer session. The one of the question we got it, if we file the return online this year, are there any possibility to go back to the manual system next year if we wanted for the individuals or partnership?
Yeah, individual can, yeah, but corporate definitely from this year the mandate e-filing is mandatory. And Mr. Gajendra, I want to highlight one point that another chance we have given this time, taxpayers who didn't file the previous year return, that 1920, the e-service is available for that return also. Then if anyone has not filed the return, then they can file the 1920 and 2021 both here.
Okay, the next question is based on the SSID. They ask why we need SSID and what is the purpose of SSID?
Yeah, yeah, Mr. Nandan will answer that question, Mr. Can you hear that, Mr. Nandan? Can you hear me? Mr. Kajendra, can you hear Mr. Nandan?
Not much clear.
Yeah, you come here.
Right. That means normally in thank you very much to all. In individual, this is in this program is mainly focused for the individual income taxpayers, but we want to highlight about the SSID, the company tax return filing also. That means if any individual, they not required to obtain SSID for the filing individual income tax return. Only requirement is PIN number. If your email is already updated in your profile, then you can request PIN number. Then within 5 seconds, you can obtain the PIN number. Then REMIS system is now advancement is done by the Department of Inland Revenue. Then you can obtain any PIN number within 5 seconds. The second one is, if you haven't update your email address, you can request by mention postal. Then we know that may be taken a time to receive to a PIN letter. Then you can send the email with acknowledgement to the pr@ird.gov.lk. Then you can obtain the PIN number through the email. Then if the company, if they want to file in the return, they require to obtain the PIN number first. Then they require to obtain the SSID also. If received the SSID before the login to the system, these all are one-time password. One-time password. That means before the using, required to authorize. Most according to our experience, we saw most of them are not try to log in, not authorized before the login. That means we advise to all before the login by using the SSID or PIN number, then required to authorize first. Then SSID is required actually for the file in the company tax return. Individual not required to obtain any SSID. Okay.
Thank you. So moving to the next question, I am combining two questions. One is there are in the manual tax return has a H to enter the residency status on the page 1. there is no similar cage anywhere in the online individual income tax form where we can enter our residency status. And the other question is, we have to mention the overpayments that's refund due from the previous years in the return. Thank you.
Yeah, good evening. There is no any option to declare whether this is a resident individual or non-resident individual. Both resident and non-resident individual have to use the same individual income tax returns. The difference, only difference in case of requesting the personal relief, that is why in this year of assessment, personal relief cage number 80 in the main return of individual income tax, it has been enabled to be taxpayer. As you can see in the main return, all the other cages are disabled to the taxpayer except the cage number 80 of the personal relief. So if the taxpayer is a non-resident person and the non-citizen, what he can do is he can just make the personal relief as 0. So other than that, there is no option to select whether the person is resident or non-resident.
Okay, then there's a question. Are there any physical signatures required on the online filing? I think answer is no.
No.
Okay, then they're asking, are there any proof documents to be submitted when doing the online filing of individual income tax?
Proof document, basically there's a certain type of document has to be submitted with the return, and the supporting document has been mentioned under the supporting document interface. What the taxpayer can do is he can select whether he is going to submit the supporting document with the return, or there is an option. Taxpayer can decide to submit the other document, the proof document in later. So at the end of the confirmation page, there is option. Taxpayer can decide and he can state whether he is going to submit the other document now or later. If we click on the now button, he has to submit the document, and or he can do he can submit the other document in later as well.
Thank you. And there are a lot of questions on this relief given on the solar panel. So I will combine all and ask as a one question. They're asking whether the investment made in solar panel few years back, whether can be claimed or it has to be during the investments only.
Basically that the cost incurred on solar system establishment can be claimed since 1st of January 2021. So it will be applicable only 3 months of the year of assessment 2021. That is the situation.
Okay, then there's a questions on this refund. They're asking whether they can set off the refund they claim based on the last year return.
No, there is no way to claim the refund as a tax credit against this year tax liability. In case taxpayer having a refund from the previous year, that taxpayer has to request the refund from the previous year. It cannot be set off against this year through the return itself.
Gajay, one thing on the solar panel, what they're asking is if they have incurred the expenditure earlier.
Yes.
Either in whether that can be claimed, you know.
Yeah, but the answer is they are mentioned from first, whatever investment made from 1st January 2021 only can be claimed.
Yes.
Right, okay.
Then they're asking another question on this health insurance, whether the insurance policy also can be claimed, the health insurance premium paid can be claimed under the expenditure relief.
Basically, health expenditure can claim under that expenditure relief. In case of Yeah. Basically, this is for the health expenditure, not the health insurance premium payment.
Okay, then on the other questions come on this relief again, the educational expenses. They're asking, for example, if the student is studying in Sri Lanka for a degree outside Sri Lanka, whether they can claim the premium paid or the installation fee paid to the outside colleges, like example, a university in UK or USA, whether they can claim that as well.
Yeah, according to the amended act, only local education expenditure can claim under this expenditure relief.
So example, like if a member follows the ACC or CMA and they pay the fees for the local tuition provider, whether those can be claimed.
Yeah, can claim.
Okay. In Schedule 9C states installment payments. If PIT is paid by the employer monthly, where should it be recorded in e-filing?
PIT, sorry, can you repeat it again, Mr. President?
Yeah, they are saying the PIT is paid by the employer monthly.
Yeah.
So we have to disclose that in the online return.
PIT paid by monthly?
Like pay.
Oh, APIT, I think the
APIT.
yeah.
If the person has paid APIT by himself, that detail to be recorded under the installment payment. It's become installment payment.
No, here the question is the employees. I think he has given the instruction to the employer, and he deducted and sent it monthly.
By employee himself deducted the.
No. Employer deducted and paid on behalf of the employee.
Employee.
Yeah, then
like a pay.
Yeah, it's become pay, you know.
Yes.
So if it is paid by employer on behalf of employee, that employee as an taxpayer no need to declare that amount and as an installment payment. It's become a pay credit.
Okay, then there's another question. Can we deduct expenses incurred in renting a house from gross assessable rental income and also claim 25% relief?
25% rent relief can be claimed against the gross rent income. And the question is
whether any expenditure incurred in renting out the property also can be claimed in addition to the 25%.
No, only 25,000.
25%.
Yeah, 25%.
I think the other question is that whether other expenses are allowed. This 25% represent only the repair. If there are repair, then that 25% is there, but other expenses you can claim. I think that may be the question.
Yes, he is asking like broker commission and things can be claimed or not.
Can claim because under section 11 it is open. No?
Yeah,
section 11 it is very clear. It says in the case of business or investment, you are allowed to claim the expenditure incurred in generating of that income.
Yeah.
Therefore, you can claim.
Yeah.
Okay, then there's a question on obtaining a PIN. If we have a digital app which has the salary slips on PDF forms submitted to whether we can obtain with that. The salary slips they are getting on through the apps on the PDF forms. So whether they can submit as a proof and open a TIN.
TIN, yeah. TIN,
yes.
Even digital.
That mean digital slip. That mean if anybody they want to open the TIN number, that mean if they are liable, then they can log into the IRD system. Then they can request to for the taxpayer registration. Then fill the application and submit the proof document for the, if any address is different from the NIC address, then they can upload the utility bill, then submit. Then IRD will be registered and submit the PIN number plus TIN certificate plus PIN and mail to your email address. Not required to any of the proof document. That means if any person is liable for the tax, then they can come to our system, then register.
Okay, then there's another question. Please explain how to authorize a tax agent.
That means if any taxpayer, there should be fulfill some requirement. That means first tax agent should be registered in the system as a tax agent. Then taxpayer can log into the system via PIN number. There's in link we call as authorize tax agent. Then click the tax agent. Then put in the tax agent PIN number. Then there's in appear what are the tax type required to authorize. Then put in the from date to date for the authorization period. Then authorize. Then in other hand, that link is open to the tax agent. Then tax agent can authorize their staff for work behalf of the client. Then the particular staff member can log into the system, then fill the tax return, then they can prepare in for the tax return for behalf of the client.
Thank you. Then there's another question on this. He is asking if the individual is having income for certain periods and not having income for the other periods. So during the periods which he is having the income, whether he should pay the quarterly tax and claim as a refund, or he can annualize it and pay based on the installment.
Yeah, Mr. Gajendra, you know that according to the IR Act, the taxpayer has to file the set form. Set form is
Yes.
statement of estimated tax payable. The based on statement tax payable, that individual or corporate taxpayer has to pay the quarterly installment. Then if he filed that estimated tax form, that set form, without he declared first liability, any tax liability and the quarterly payment, and the taxpayer can amend the estimated tax form by quarterly. The next period, if he has no any income or any payable tax, then he can file the amended revised set form. Based on that set form, the taxpayer has to pay the installment.
Okay, now I called Mr. Ruchira to take a few questions. Ruchira? Okay, I think he's having some technical issues. So there's another question. Can relief be obtained for investment in equity funds which are invested in CSE and Treasury bill?
Relief, Mr. Gajendran, is it regarding the relief?
Yeah, this 1.2 million.
Yeah,
They're asking, for example, that invest unit trust like that, whether they can claim, in turn, unit trust invest in the share market. So whether they can claim the investment amount invested in the unit trust as the relief.
Basically, the amended act says the amount invested in stock exchange and the purchase of share from stock exchange and the investment in government securities can be claimed under that expenditure relief. In case of investment made on unit trust, it has to be checked further and have to answer for that question.
Okay, so if you can check with the Inland Revenue authorities, and if you can inform to the CMA, we can send those answers to all the participants.
Yeah.
Okay, then there's another questions. Since the Commissioner General also here, most of them wanted to know, are there any possibility of, or are there any indication that the tax filing date will be extended like last year?
Mr. Gajendra is still not have decided to extend the tax filing date. But you know that as I previously explained, taxpayer can file the return any date, but it is affected to the time bar date. Because time bar date is counting based on the filing date. The 30th November is not a exact, it is a due date. But if taxpayer file the return early, then he can get the benefit from the time bar date. And if we late, the same thing, same thing happened. That previous year also we extend the time, the return filing date, but that means we are not going to impose penalty on that date as a late filer, but time bar date will be calculated based on that filing date. That is the situation if we extend the time date. But our request is please file the return before 30th November. It is a better year.
Okay, I think we are almost coming near to the end, and thank you for your wonderful time and the present answers given. And I like to hand over to our president.
There was one question I think I saw on the insurance.
Yeah.
Because last the insurance payable for the insurance policy is deductible. Can we get a maybe explanation on that one? Because insurance policy is permitted for deduction.
Yeah, insurance premium can be deducted as a expenditure relief under the Schedule 5, and the life insurance premium basically can be deducted as a
medical insurance. Yeah,
medical insurance.
Is they are referring this 1.2 million includes the medical insurance also.
Yeah, it can deduct as a insurance premium payment.
Yeah, right. Okay, thank you. I think we now have come to the closing stages. So let me thank everyone, but let me invite Mr. Ennayaka Bandara, who's the Vice President of CMA and Vice President of SAFA, to give the vote of thanks.
Thank you, Professor. Dear speakers and panelists, ladies and gentlemen, on behalf of CMA, I'm glad to propose this vote of thanks after a successful knowledge sharing and continuing professional development webinar conducted by the experts in taxation. As mentioned by the moderator in his opening remarks, speakers and panelists have associated with CMA in the past and helped in numerous ways in conducting CPD programs and other activities. With that note, first, our special thanks to Mr. M.W.C. Bandara, Commissioner General of Inland Revenue, for your participation as a keynote speaker. Mr. Bandara highlighted the role of the department, tax agents, and mandatory requirement of filing tax return online. Next, I would like to thank Mr. Athula Ranavira for his insightful presentation and taking time off to share his experiences to educate us on file your own tax returns online. In his presentation, he covered individual tax planning, tax computation, and filing of tax returns via online. More importantly, as a tax practitioner, he explained in detail the procedure to be followed by taxpayers in filing tax returns online. Let me also thank other officials of the Department of Inland Revenue, Mr. Sujiva Henadira, Mr. Nandana Kumara, for sharing their knowledge, providing clarification, and answering the questions raised by participants. Let me also thank other panelists, Mr. Desapriya Senanayaka and Mr. Amila Sugatapala, for your valuable contribution in sharing the knowledge and highlighting the problems that may encounter by taxpayers. I would like to thank our moderator, Mr. Rajendra, and Mr. Ruchira Pereira, council members of CMS Sri Lanka, for the job well done. I'm sure that the guidance provided by Mr. Atula, Mr. Bandara, and all other panelists will assist all of you to enhance your knowledge and submit your tax return online by following the due process before the due date and avoid any penalty. Let me also thank our President, Professor Lakshmana Vatavala, for his guidance and organizing this webinar under the CPD programs to improve the skills of our members as well as others. In conclusion, I would like to thank all our members and others for your participation and the CMA team for the support extended to conduct a timely, important webinar. Thank you. Take care. Stay safe. Good night to you all.
Thank you.
Thank you, Mr. Naga. Thank you, Professor.
Thank you.
Ruchira, you can maybe do the closing here.
Okay. Thank you, Mr. Naika. Thank you, Professor Vatavala. Thank you for our panelists, our moderator, Mr. Gajendra. I must especially thank Mr. Atula Ranavira, who has been coming for various webinars conducted by CMA Sri Lanka. Actually, this is his third webinar, which he has attended. So thank you, Mr. Ranavira. And also my thanks goes to all other panelists. Thank you very much for coming here. And I would now like to officially conclude the session. Thank you very much.
Thank you very much.
Thank you.
Thank you and good night.
Thank you all. Good night.
Good night. Thank you, Mr. Sujiva Henadira and your colleagues. It was very, very useful one, and we will also send you the questions so that maybe you can also go through it and give any clarifications that are required. Okay.
Okay. We will share this presentation also. We will share.
Yeah. We'll present that. Thank you, Atula. Thanks a lot for the nice presentation. There were a lot of comments about your
Presentation.
comments. Yeah. Okay, then. So we will wind up, and thank you and good night to all.
Good night.
Thank you. Good
Thank
night.
you.
Thank you and good night.
Thanks.